Well, that was just the news there about that price cap being raised. That's just been announced. And those of us, of course, struggling with the cost of living, as we heard there, we will be hit by a double dose of bad news, as Ofgem have obviously just announced that energy cap rise from £693 a year to £1,971 a year today. So a massive increase there. This is all whilst the Bank of England looks to hike inflation.
I think they need to reconsider that. I mean, they need to reconsider the whole idea of it putting up interest rates. But let's have a chat with Vicky Pryce. She's the Chief Economic Advisor of the Centre for Economics and Business Research. Good morning to you, Vicky. Now, it seems to be more and more things that are really squeezing the consumer. And I can't see how this will encourage more spending within the economy to boost the economy. And I don't understand the thinking behind, first of all, the interest rate rise, which people are talking about, but also this particular situation. Does the government have any kind of plans as to how to protect us as consumers from this?
Well, the truth is, of course, that gas prices, wholesale gas prices, have gone up very significantly. They're now something like 4 times as high as they were a year ago. They were 8 times as high as they were a year ago, just a month ago. So perhaps there is some hope that things will get better in the future. But it had become quite impossible for energy companies to continue to survive if they have to buy their gas at such high prices and then sell them at a considerably lower price, which is really what the energy cap was making them do. So it's understandable that it would be going up at some point, and it just looks at what happened over the last 6 months. Now, what happens later will be very significant if prices indeed ease, although right now with the political pressures, the geopolitical issues regarding particularly Russia and Ukraine, that doesn't look very likely. But when those prices eases, they're bound to at some point, then obviously the consumer should be able to benefit. But there could well be more increases between April and October. So this may not be the end in terms of the customers and what they have to pay, so households. So what, of course, the government could do and could have done is just saying we'll subsidize it, which is what they've done in many other countries. For example, in France, they've said there will be only a 4% increase in energy prices between now and the end of January next year. And they're making energy companies reduce their prices directly. But they have one very big one, which is partly state-owned, and they can do that. And it's the nuclear power company, EDF. So other countries have done different things. They have put windfall profits taxes on gas companies that have made quite a lot of money out of the increase in prices. We're not doing anything of the sort. Instead, I think we're about to, if indeed the forecasts are correct, do something about council tax, possibly, so that people at the lower council tax bands can get a refund, but also a loan to energy companies so that they can reduce that increase in the price that we would have seen otherwise, and then they can pay it back over a period of time. So it's all a bit of a mess, just as you were saying, but it all fundamentally starts from the fact that we had an energy market that didn't make very much sense as it was anyway. And then, of course, we'll get the interest rate increase as well, quite likely later today.
But the loan thing, though, that I'm finding a little bit troubling, really, because, of course, then these energy companies, lots of these smaller companies have obviously been blown out of the water because of this whole wholesale price rise. So therefore, they've had to sort of go bust. So then what we're going to have is a cartel of about, I think it's the big 6 now, still back there with loads of money. And there might not be really any real impetus on them to bring down the prices. They might use to simply take the money for these loans. I mean, we saw similar behaviour with the whole banking crisis. I can't see that. Why does the government not thought about actually alleviating the consumer, like, for example, the windfall tax that other countries are considering and things like that, which will mean that the consumer will benefit and not have to pay so much?
Well, on the loan front, you're assuming that it will be a very low interest one and that, therefore, it isn't going to be a huge cost for businesses. But indeed, they will have conditions, I would imagine. In other words, you're not going to get the loan if you're not going to be reducing the price by a certain amount. And there is now also, or there has been, and we wait to hear, some calculation on what it would mean per household. It could be £200 per household. So they'll have to do that. So it will be a condition for them to get that type of loan. If it's low cost, it won't cost them an awful lot, and then they repay it when things improve. The question is, will things improve? And that's the point that I was making earlier. And my understanding is that this loan, or we'll hear more, is for 1 year. But of course, the problems with gas prices may stay around for longer and affect lots of companies as well. But there are other things to do. I mentioned, of course, and you suggested it too, as a possibility, the windfall tax, given we had results from Shell showing how well they've done, for example, in the last year, but also the calls that had been around for some time. Let's do something about, for example, the VAT, which is charged on energy bills, but also maybe delay, because the consumer will be hit again, the tax increase that's meant to come in April. The national insurance tax is going up both for employers and employees. So do something about the personal disposable incomes, because otherwise, as you hinted, the economy will suffer. People are not going to have enough money in their pockets, and wages are going up, but they're not going up as fast as inflation. So basically, people are being squeezed quite significantly, and one would worry about whether some of the forecasts that have been made about growth for the UK economy this year will in fact materialise.
Vicky, the thing is, though, Rishi Sunak and also Boris Johnson have been adamant about the fact that they are not going to delay this national insurance hike, and they are aware of the situation right now. So that particular thing doesn't sound like it's actually going to happen. And I think a lot of people are looking at this and saying, well, there's too many things going up at the moment. What have we got left? You've pointed out a few things, but this interest rate rise, apparently, that may well happen as well. Do you think that they should also put that on the back burner?
The concern that the Bank of England has is the inflationary expectations. In other words, everyone is expecting prices to continue to go up. And of course, this hit in April is going to be quite significant. And if you let inflation become rampant, if you like, then it's very, very difficult to control. So the view is, let's raise interest rates so that people realize that we're quite serious about controlling inflation. But in reality, there isn't very much that they can do. Because this issue is a worldwide issue. So there is a faction of economists who say, what's the point of raising interest rates since you can't really control what happens internationally right now? It's a question of supply and demand. It hasn't been sorted out yet. Those imbalances will sort themselves out at some point. And this interest rate increase, all that it will do is hit individuals and hit businesses. And there are others who say, no, we've really got to increase interest rates quite significantly, because that way it will show determination and people will not be asking for high wage increases because they expect inflation to come down. Well, one probably somewhere in the middle. We probably need to show some willingness to do something about inflation, but certainly not raise interest rates too much. And remember, they're still very low. That's the one consolation. 0.25% now, they may go up to 0.50. Well, that's still very low by historical standards. And, there is a bit of hope that perhaps when increases in gas prices in particular start slowing down, we might see the extra increases in interest rates that are expected not be so dramatic, and then maybe they can start coming down again. But no, it does not look very good. And the government has been known to change their minds. I mean, who knows what they might do between now and April in terms of that national insurance increase.
Wow, it's so interesting. Vicky, look, very, very briefly, because we're running out of time. Will anybody escape this hike in prices? I mean, if some people are on fixed tariffs and things like that, or is there literally, it's all changing now and everybody will be affected by this?
Well, almost everyone. Remember, this is the tariffs, they are the variable rates. In other words, this is a variable tariff, which is the one that goes up. Lots of people had fixed tariffs before. But the cap was only on the ones that were being raised, periodically by the energy providers, and you signed up for one or you signed up for the other. Right now, this variable one, if you like, is the best price you can get. But there are some companies which rely almost entirely on renewable sources of energy, and they sell their electricity to consumers, who are not subject to that cap. And they're not subject to anything that may be happening right now. So they may have kept the prices lower because they were hedging, is possible, but the chances of finding something which is better than what we're going to be getting in April are very, very small.
Interesting. Well, Vicky, thank you so much for that. That's Vicky Pryce. She's a chief economic, advisor at the Centre of Economics and Business Research